Hey, Puppy Trades! I wanted to do a video analysis update of the stock market, but damn! Holy cow! We keep having days like Thursday and Friday. Oh man. Oh man. It's hard to be a FinTwit influencer like me. Because I really do this shit. But I'm also a very competitive person. I want to be in the influencer game. I want to compete with the big FinTwit accounts. The big truther accounts. Come on now. If you really care about either of those things, this is where you gotta be. But as a trader and an investor, I'm not ever supposed to say, oh baby. Oh baby. I'm not ever supposed to say, oh man, goddamn. But that's really what kind of has been going on recently. And by recently, I mean a bit. But especially just recently. I'm about to get a bigger paycheck from YieldMax and the bond buy right ETFs from BlackRock, LQDW and HYGW. I like to blend LQDW with IGHB specifically. I'm about to get a bigger paycheck from just those two fund families than I've ever gotten from any line of employment ever. In about 2 or 3 months from now, about 4 months from now, the vast majority, 99% of the people in this country will not have a bigger paycheck than me than I get from just those two fund families. Oh man, goddamn. And YieldMax, by the way, let me tell you something. People are afraid of YieldMax. YieldMax got the streets busting, fam. Let me tell you something. This YMAX ETF is kicking ass. And it's taking names. And people are scared. FEPI, kicking ass. Taking names. Got people scared. YBTC. And now YieldMax offering the exact same version of YBTC. 2 dividends a month from Bitcoin premiums. Oh man, goddamn. This ETF right here, people used to say very proudly, no one's ever gonna beat the NASDAQ or the S&P 500 and get a high yield consistently. This ETF might take that out of existence. And let me tell you something. I really made this video just to be a regular, generic, run-of-the-mill stock market update. I promise. I didn't mean to pick 1, 2, 3, 4 stocks that have ETFs. Apple has 2 that run the out-of-the-money synthetic covered call on the stock and make massive premiums, huge dividends, huge total returns. Coinbase and Nvidia, by the way, those YieldMax ETFs themselves that I own, I took very large positions in right around the time both of them came out. Every dividend that I get from those YieldMax ETFs for Nvidia and Coinbase for the rest of my life have already paid for the whole principal. Every dividend from Nvidia and Coinbase forever is house money. Hallelujah. I'm about to start quoting Bible verses if I keep getting into it. I'll spare you that. We'll look at Apple right now. I think it stole the show rightfully. From this high, I believe this is an A, B, C correction. This is a clear connector wave. Very common. The connector wave from wave A to wave B will take the form of an expanded flat. An expanded flat just means that wave B slash wave 2 breaks the high. It's always wave B actually. Breaks the high of the beginning of wave A. So the most of the time that you'll hear expanded flat is when a bear is trying to convince you that a stock or the whole market is going to crash when their count has been invalidated because the stock market's made a new high. Now, stock markets do make cyclical tops. That's not a myth. But most of the time, an expanded flat is used properly. It's a connector wave for a wave B. An ABC connector wave. I believe that's the case here. So this is wave A, this is wave B, and this is wave C. From this low, 1, 2, wave 3. Notice wave 3 makes the highest high on the weekly RSI. It's followed by a shallow wave 4 and a wave 5 that ends with momentum divergence. We have an A, B, C correction that ends right at the 161.8% extension of the length of wave A placed at the wave B high. Now, some wave theorists may say this is wave A right here, this little wick. You can see this is wave B, this is wave C. That might make it a little cleaner, but overall, from this low, the invalidation was 161.89. That's because that was the 50% retracement. I was calling for a wave 1 slash wave A, a wave 2 slash wave B, and a wave 3 slash wave C to begin. And I believe it has begun. So it's really important to understand, most of the time when people think about the stock market, they think that for the past 18 months, every stock's been Nvidia and Oracle and super micro semi supercomputers, and it hasn't. There's been a lot of stocks, a lot of sectors, but a lot of stocks specifically. And I should throw the industrial sector, by the way. It hasn't all been tech. And if you follow Marty, and if you follow Alpha Charts, who I follow, they don't follow me back. That's cool. If you follow Marty and you follow Alpha Charts, they're very good. And they've been talking about all kinds of stocks that have had explosive rallies. But there's been a lot of stocks usually thought to be considered the stock market. Apple, Tesla, Boeing. And they really haven't had rallies at all. You know, maybe Apple, I'm a little discrediting this rally. But it's been in correction for quite a bit. And if we look at 1, 2, 3, 4, 5 waves from this low and an ABC correction, and we zoom out to the bigger picture of Apple, it might be worth noting some stocks like Nvidia, for example, have gone the length of the rally from the 2020 low to the 2022 high in January, placed at this low. If this was wave 1 slash wave A, this was wave 2 slash wave B. Nvidia is way past this equal legs target that would take Apple up to 250. Does that guarantee Apple's going to go to 250? No, it doesn't. But when people think about this broad narrative, the stock market's been on a runaway train, Apple's a good reminder that it hasn't all been peaches and cream. Apple right now is basically at the exact same level as the September 2022 high. I think from this low, this is a 1, 2, 3, 4, 5 waves correction. 164.07 is a little wide, but this is really a very important barometer for the S&P 500 and the NASDAQ. And if that low holds in the big picture, I think, by the way, the next big buy for Apple, not that it matters and not that this is investment advice in any way, the next big buy for Apple will probably be when the length of this wave 1 placed at this wave 2 low is retested for this trend line. Now this trend line is invisible. It's only going to be visible to wave theorists who take the length of this rally, copy and paste it, and place it at this low. So anyway, a little woo-woo there, but the length of wave 1, place of the wave 2 low, should 164.07 hold, gives Apple a target of roughly 239. That's not too far away from that 250 number we just talked about. Is Apple going to play catch up with Nvidia? It's really the most important question in the stock market. And I don't 100% sure know the answer, but I can promise you that's what I'm betting on. That's what I'm betting on. That SPY is incomplete to 600. The Dow Jones is incomplete until 47,000-ish. And Apple could begin a cycle up to 239. So I don't need to explain what that would mean for the stock market. Let's look at SOFI. Before we look at SOFI, I don't get them all right. I had one blemish for earnings season. For the second quarter earnings season, I'll tell you what, man. For someone who is forecasting stocks as specifically as I am, one blemish for the Q2 earnings season, not bad. That was Starbucks. And honestly, that was why I included Starbucks. So, and I'm 1 for 2 on Starbucks anyway. I know I like Starbucks anyway. SOFI Technologies beta is 1.65, suggesting it's 65% riskier than SPY. The reward, SOFI formed a large wave 1 from 4.24 to 8.24 and ended wave 2 with an ABC correction at the 61.8% retracement. If SOFI is above 4.98, 4.24 invalidates. Wave 3 to plus 9.11 can occur before a wave 3 or 4 higher. So, bang. And I was using institutional options activity. I suspect that SOFI is still going to be on the same screen, but let me show you the screen that I saw today that made me think SOFI would be an interesting, well, I know it's an interesting thing to view for institutions. Is it bullish? No one quite knows. One of my favorite screens, just to be honest, by the way, holy crap. Anyway, never mind. I like to sort IB ranking percentile for the top 20. This is the top 20. And by the way, let's just look at this. Google, Amazon, Microsoft, and Apple, all three of those stocks have 2 ETFs that just so happen from YieldMax and Curve to pay 2 dividends a month, running a very similar strategy called the out-of-the-money synthetic covered call. Just a fun tidbit. I did think this was interesting, by the way. I've talked about K-Web a lot recently. I'm going to give it a break for this video. We're going to stick to America for this video, but I did stick in one oil stock just to diversify. So, a fun oil stock, by the way. At least that's what the institutions think. So I like to sort this from the lowest IV rank. I don't see SOFI. For this screen, sometimes I sort it twice. And I still don't see SOFI, but I do see Dover. Friendly reminder to go check out my recent work on Dover. So SOFI isn't on this screen right now. Let's see. I think we'll see what I'm looking for if we just look for. I saw it on the screen intraday. If we look right here, there it goes. 0% IV percentile. So SOFI has the lowest implied volatility rank that it has in the cheapest options, i.e. that's what these numbers mean. Let's pretend both of these numbers were 0. What would that mean? That would mean that SOFI, all else being equal based on implied volatility, has the cheapest options it's ever had in the past 52 weeks. That's all that means. So, all else being equal, is it better to buy a strangle and straddle on SOFI, or is it better to sell a strangle or straddle on SOFI? Well, low implied volatility can stay low for a bit, but generally, this is kind of a signal to me that institutions are very interested in SOFI's super cheap options at a time where retail, let's look at Nvidia, let's look at anything but SOFI, Robinhood even, a lot. So as far as SOFI goes particular, I'll tell you what, I'm a big fan of THTA. That's a new ETF from SOFI that competes and beats with the ETF that I've also talked about a lot, HIGH. So it holds 3-month treasury bills and it sells credit spreads, and it gets a pretty good return. Anyway, I'm going to go into a deep dive for SOFI right now. And I slaughtered this. Fun fact. I think this is wave 1, and this is wave 2. So, it's important to note a few things. Institutions are not going to use this stop as 6.41 as their stop. They're not going to use a stop loss at all. They're going to use a position called the married put. That's really important to understand. So they're going to buy a married put on SOFI. What's that mean? Well, this is exactly what they're going to do. They're going to go to the options chain, and they're going to go to, say, 3 months out. Yeah, let's do 9 months out. Let's do that September quad witching. Big expiration. And they're going to look at the put chain, actually. We can see what chain they were actually looking at, but for the married put, we'll see what chain they would be looking at. They would buy this 7-strike put for a married put. So this 7-strike put has a delta of -42. That means if they want to enter a long gamma position, they can buy 42 shares of SOFI, and they can buy one of these puts. The max risk is this $93 right here. So that's the max risk. The put goes to 0. The big move doesn't happen. But what's the problem? That big move is probably going to happen. So if someone hypothetically wants to learn a lot about options, they can look at SOFI and they can go down this options chain. I'd recommend starting with the quarterly expirations, March 3rd to 4th week of March, 3rd to 4th week of June, September, and December. Also, the 3rd to 4th week of January. So there's really 5 major options expirations. So just go through those, look at the 7-strike put, and see what would happen if an institution took a delta neutral position with the 7-strike put. If you want to get fancy, use these 5.5 and 6 puts as well. The way a married put is calculated is by taking the delta equivalency. So if the delta is -38 or the delta is -22, it is offset with either 38 shares or 22 shares. The idea is that if SOFI has a crazy move, this implied volatility number expands from 0% to 99%. It doesn't matter if the move is to the upside or to the downside, because it is a long gamma position. That's something that's really hard for most people to fathom, but it's so important. It's so important to understand. Anyway, so this is SOFI. I don't believe this is a wave 3 or a wave 4, and that's because of that pesky, commonly cited but accurate rule that wave 4 doesn't break the wave 1 high. It retests the wave 1 high. I'll tell you what, using that's a principle. It's not a rule. Using that as a law in Elliott wave theory is going to really be rough. It's going to really be rough. But it is a principle, and I think 1, 2, 3, 4 is a little invalid because we go deep, deep, deep past this wave 1 high, even for a high beta stock. So I'm going to say, yeah, that's a wave 1, that's a wave 2. It's probably not accurate to say this is 1, 2, 3, 4. Although, for high beta stocks, would a wave theory professor say it's incorrect to say wave 3, wave 4 at the 61.8% fib? They wouldn't say it's incorrect, but they'd probably say it's not the most correct. Anyway, if we look at this high right here, this high is 11.70. This low is 4.45. Since I think this is a wave 2, I'm going to use the 61.8% retracement. We're going to look at some of these fibs. So 6 wide invalidation, but meaningful. That's 78.6% retracement. This tight invalidation is 6.41. So if those hold in the big picture, SOFI can begin a wave 3 of wave 3. In the big picture, if that low did break, the reason 6 is an important invalidation is because it could be 1, 2, 1. It goes for that Wyckoff selling climax below this low for wave 2, and then wave 3 explodes. I don't think that's the case. And I'll give you evidence for why. Within the cycle from this low, just to be frank, if we just look at this daily RSI now, from this low, from it looks like November 20-ish, 1, 2, check the RSI, wave 3 makes the highest high, very clear. Four, and then wave 5 ends with Momo. I think from that low, that's a pretty good 5 waves impulse. And I think the institutions are using these long gamma positions to play a move to the upside. So that's all the evidence that I'm going to give for now. A, B, C. That's why 6.41 is the tight invalidation, because if that is correct from this low, we got another wave 1. And another wave 2. So it's very explosive should this be the case. Minimum length of wave 1, place at the wave 2 low. Wave 3 of wave 3 gets gnarly on multiple degrees. So that's SOFI. I bought SQY recently. I want to just focus on the cycle from this low. SQY and PY for PayPal, not PayWow, doing pretty well. Large implied volatility, and they've been in an uptrend. So should this low hold, and by the way, I think this subdivision is 1, 2, 3, 4, 5. 3 up here. Highest reading on the RSI. Shallow wave 4. And a wave 5 higher. Wave 5 ends with momentum divergence. So, I believe square ultimately is incomplete until the length of wave 1 placed at the wave 2 low is reached, and that's just above 100. From this low, I think this is 1, 2, 3, 4. Wave 3 very commonly has this big gap. Wave 4 retests the gap and never gets broken. Wave 5. Then we have another wave 1 that's completed by that. This is wave 2. And this is wave 3, I'm expecting. So 61.96 will invalidate that. And I'm looking for wave 3 of wave 3 to begin. And I am long SQY. Starbucks, biggest miss of the week. Biggest miss in a long time. And it's also been a big hit. I think from the 2020 low, 1, 2, 3, highest high on the weekly RSI, shallow wave 4 and a wave 5 higher, large wave 1, and ABC correction. Right around here, I not only posted but bought a crap ton of Starbucks, and it ended up being a nice gain. It ended up marking one of the big bottoms for not just XLY, but the whole stock market. And then I thought that wave 2 was going to end with an invalidation of 78.47 to 79.17, and that was broken. Now, from this low, though, I will say Starbucks has a pretty interesting count, and I'll tell you why. The reason why is that from this high, there's a chance this could be wave A, this could be wave B, and this all the way down here could be wave C. Now, the good thing about this is that there's a very clear invalidation. The invalidation is 68.39 because that's the wave 1 low, 1, 2, 3, 4, 5. It looks like a clean impulse. And AB, because wave 3 makes the highest high on the RSI, wave 4 is shallow, wave 5 ends with Momo. So if 68.39 holds, the length of wave 1 placed at the wave 2 low could be a very interesting place for an ABC correction to end. It's a little more dramatic than I expected, but if Starbucks is a monopoly, you know, maybe they did make Starbucks pretty difficult. 68.54 will hold, and wave 3 of wave 3 will begin. The larger the yield gets, Starbucks is a pretty big play on coffee and real estate, two sectors I'm bullish. Correlation analysis killed the cat, not curiosity, but that's just my thoughts on Starbucks. We don't get them all perfect, but the way to protect from not getting everything perfect is diversification. I've seen institutions take a lot of interest in Tetra Technologies. We'll just refresh on what this stock is. They've taken pretty bias to the bull bets on Tetra Technologies and B&O, the Brent crude oil ETF this week. So a lot of people talked about Powell pausing rates, not hiking anymore, keeping them steady. And the reaction to that was a lot of tech, a lot of small caps, and I think there's a lot of truth to that. But very quietly, the institutions were really showing what they actually thought about those announcements. Tetra Technologies is a geographically diversified oil and gas services company focused on completion, fluids, and associated products and services, water management, frac flowback, production well testing, offshore rig cooling, compression services, and equipment. The selected offshore services including well plugging and abandonment, decommissioning, and diving. So that's Tetra Technologies. It's based in the Woodlands, Texas, and it is basically an oil and gas play. I think from this low, Tetra Technologies formed a large wave 1/wave A. This wave 1/wave A is pretty clear, subdivided into 1, 2, 3, making the highest high on the RSI, 4, 5 waves, ending with momentum divergence. So I believe this is a large wave 1/wave A. This is an ABC correction. That ends a large wave 2/wave B. And from this low, I believe this is a wave 1 and a wave 2. I'm looking for the 78.6% retracement to hold. This high is 6.77. This low is 2.43. So I'm looking for 3.36. To hold. And I'm looking for a wave 3 of wave 3 to begin. So that's the oil and gas stock, Coinbase and Microstrategy. Coinbase, at least one of the best investments I've ever made. Definitely one of the best calls I've ever made. I've made so many Coinbase calls. They're growing out of style. I didn't just do it once. I've had 2 videos on this page that I'm sure you're aware of where I perfectly predicted not just one Coinbase wave 3 of wave 3 rally, but also when it started to end the wave 4 and wave 5 correction, I came out again, and then boom, bang. We'll look at this exact same untouched chart, the untouched chart of what I've done. Perfect for Coinbase again, but I'm not done, and I think it's a pretty clear count for Coinbase. I believe, as I predicted, this was a large 1 and 2, and from the cycle, 1, 2, 3, 4, 5 waves up. Look at that. Bang. Bang. Every dividend that I get from Coinbase and Nvidia for the rest of my life, house money. Hallelujah. I believe this was a large wave 3, and I actually averaged a little more into my Coinbase position. because I believe this is a wave 4 correction. So I used some dividends to add a little bit to Coinbase and MicroStrategy. 1, 2, 3, 4, 5 waves up. So I'm going to take the Fibonacci retracements for Coinbase. And it looks like right there, the 38.2 to 50% retracement. Who knew would be where a wave 4 ends. This high is 283.48. This low is 46.43. Wow. Just slightly above the 38.2% retracement is where this wave 4 ends. Wow. So I'm going to look for that to invalidate. I've given my Bitcoin update recently. I think I'm going to save that for another video. But yeah, I am still holding CONY. Every dividend that I get for the rest of my life from Coinbase and Nvidia are house money. So, I really, bang, what'd I say? Oh man, I had that trend line perfect. Bang. Are we going to get another one? I'm looking for 192.93 to hold. And I'm looking for a wave 5 to begin. How big will wave 5 be? Usually, it's either the length of wave 1, as I had depicted here, or it's the length of wave 3 placed at the wave 4 low. Is it going to be the length of wave 3 placed at the wave 4 low again? No way, right? Nah, fam, you crazy. Maybe I am crazy. But I got to collect large, huge dividends from Coinbase and Nvidia. While potentially some of these crazy counts play out. Could Coinbase go to the 400s? I don't know. Institutions have been buying strangles on it. In a new position, Microstrategy, out of the money synthetic covered call ETFs. I bought them this week. I think I got in at a good price. I think this is a large wave 1 and a large wave 2. Wave 3 on the weekly RSI makes the highest high. And then we have a wave 4 correction at the 61.8% retracement, which is also the length of wave A placed at the wave B high, the wave C low, 100% to 161.8% extension. Will this be a Fibonacci reaction zone? I averaged into Coinbase. I averaged into MicroStrategy, or I started a new position in the MicroStrategy ETF earlier this week. I'm looking for MicroStrategy to hold above 1,010 and begin a wave 5 higher. How big will wave 5 be? Well, it's either the length of wave 1 or the length of wave 3 placed at the wave 4 low. Again, we see the length of wave 1 placed at the wave 4 low would not make a new high. If wave 5 were the length of wave 3 placed at the wave 4 low, that gives an equal legs target of about 2,800. Maybe it'll be hit. Maybe Coinbase will reach 400. Maybe Nvidia will reach 1,100. But I'm going to collect huge dividends from all that options premium the entire time, regardless. And for Nvidia and Coinbase, it's going to be on the house money forever. Forever.